The story of the RBA begins long before banks rose to cut their figures from the blue cloth of the southern sky, before the Reserve Bank of Australia had its name, before the Commonwealth Bank was split off from the Reserve Bank, before the creation of the Commonwealth Bank itself, before even federation. The origins of the Commonwealth Bank begin much earlier, before any of the men who forged it were born, thousands of miles away in England. In 1866, a large discounting house, accounting for half of the business, collapsed. Walter Bagehot was to write critically, "Men comfort themselves with the thought that the system has gone on for a long time. Why should it not continue?" He replies, but the exact point is that it has not gone on a long time. While the banking system was old, this level of wealth was new, as was the extent the Bank of England was at its centre as its safeguard. The Industrial Revolution created great wealth, uneven in flow, in a process of creative destruction. As the old ways fell, new ones rose from their ashes. By 1825, English banking consisted of three parts. At its centre was the Bank of England, and around it were the London and country banks. In industrial areas, they had a deficit of funds, and to facilitate growth, they needed loans. And the country areas had a surplus of deposits, and so could lend them out, and the discount houses linked them together. Before 1826, however, banks were generally small individual entities owned in partnership or individually, and were as such very local. But in 1826, Banking Acts allowed joint stock banking modelled off the Scottish banking system. This occurred in the aftermath of the 1825 banking panic, which was the end of the bubble years of loose and easy credit from the Napoleonic Wars, when England went off the gold standard to help finance those wars. The attempts to rein in loose credit are believed to be the major reason triggering the banking implosion in England, while Scottish banking, with its branch banking system, was unscathed. How the Bank of England got to be so dominant was that it was the manager of the government's business, and would in time grow to have a dominant position in currency issuance and the discounting market. In the 19th century, the Bank of England gained greater market share in notes as other London banks stopped issuing them, feeling that the Bank of England notes were sufficient. The bank also took on more responsibilities as a lender of last resort and would accept the business of discounting and rediscounting bills in times of crisis. Generally, the Bank of England had higher rates than other banks to deter business, but when cash was short, they would lend. The 1844 Bank Act limited the amount of bills issued by law, meaning in times of crisis there would be no cash available, and generally meant the law would have to be waived for emergencies. And as a result of this Bank Act, there would be no new banks that could issue notes. This was beginning a process of phasing out non-Bank of England notes. In 1824, David Ricardo in a report recommended, among other things, making the Bank of England an independent central bank, and that the government should issue notes for themselves. He also proposed that this bank should have an independent board, which was to counter criticism of the government over-issuing notes, and also to reduce influence from ministers on the bankers, who could only be removed by a majority of Parliament. S.J. Butlin considers this the founding document in Australian central banking. While there were views of gradual reform of a lender of last resort capabilities and central banking, other thinkers wanted state and central banking to be used as a weapon on the side of labour against capital interests and to destroy the money power. Others wanted to solve the problem of underconsumption. Thomas Atwood, an important figure in the labour movement, argued notes issuance should increase with population and their needs, and that the level should not be attached to gold but should rise with output. John Francis Bray had a less refined version of the surplus theory of value, and in his words, society is divided into idlers and producers, those who obtain double allowance for doing nothing, and those who receive only half allowance for doing double work, and that money was the means in which the workers were robbed. Marx wrote extensively on the banking system in Capital Volume 3, and in the Communist Manifesto, one of the 10 policy prescriptions to initiate the transition from capitalism to socialism. Point 5 states, "Centralization of credit in the hands of the state by means of a national bank with state capital and an exclusive monopoly. While only covered briefly, the structural and practical foundations of the Commonwealth Bank, and therefore the RBA, had a lot to owe to the Bank of England, and the philosophical, ideological push for a state bank has a long history in socialist theory, but a central bank also has its supporters among more orthodox economists, but for different reasons. The colony of New South Wales initially lacked currency of any type, let alone an Australian currency. In its place were promissory notes, along with an assortment of foreign currencies that migrants brought with them. When that failed, just simple barter. In addition to these, rum was infamously used and was controlled by the New South Wales Corps since Governor Phillip left in 1792. William Bligh, the captain from the infamous mutiny on the Bounty, had been sent to break up the monopolies and discipline the colony. The Corps, led by George Johnston and wealthy landowner John MacArthur, did not like this, and so conspired to arrest Bligh, and it would take some time for an investigation to clear Bligh. He was eventually replaced by Governor Lachlan Macquarie. Macquarie, looking to build infrastructure and improve the health of the colony, but lacking the funds to do so, privatised the rum trade in exchange for building a hospital. In time, this rum hospital would become the Mint and the New South Wales Parliament. The other action he took was the introduction of currency to the colony, starting with the first Australian currency, using 40,000 Spanish coins. At the time, these were globally accepted currency. Macquarie, to end the flight of currency from the colony, would punch holes in them so that they'd be worthless outside of the colony. The holes punched out of the coins were then stamped, and these were to be known as dump coins, valued at 15 shillings. The rest were called holy coins, valued at 5 shillings. And from here, Australia's coinage developed. As for the Australian banking sector, Governor Macquarie in 1817 created the Bank of New South Wales, now known as Westpac, and began issuing paper notes for the colony. From here, the colony quickly grew off the back of wool and pastoral expansion through the 1830s. Expansion stalled, causing a recession from 1841 to 1843. The first murmurings for a Bank of England equivalent emerged. Through the decades, small panics and blatant frauds brought forth many proposals for a central bank. However, it would take a much larger event to bring forth the political will to drive through a government notes issuer and some form of central bank. But given the gold rush was about to begin, Australia's alluvial soils were no ground for the foundation of a state bank. It would take until that long boom had ended and the once ascendant marvellous Melbourne, whose banks bestrode the continent, were brought back down to earth, and the colonies could be binded together in an insoluble federation. According to S.J. Butlin, of the 64 institutions that called themselves banks between mid-1891 and mid-1893, only 10 were not forced to close or refuse payments for some period of time. Of land mortgage companies and building societies, only 1 out of 36 was not forced to close. In his words, most of them permanently and most in discreditable circumstances. The 1880s had been boom times, with overinvestment in pastoral industry and buildings. Pastoralists had taken loans to improve operations, but the price of wool had been steadily falling, so they were unable to pay their loans. In the cities, the building boom collapsed when supply had outstripped demand in 1888. The crisis happened in 2 stages. Between 1889 and 1892, building societies and land mortgage companies began failing. The first was Premier Permanent Building Association in Melbourne in the December of 1889. The contagion then spread to Sydney and Brisbane, and failures of small banks and societies continued through 1892. Between August of 1891 and February of 1892, 22 building societies and similar deposit-taking institutions failed. Well-established banks were not greatly impacted by this early crisis and attributed their failures to fraud and bad practice, which was largely true, but ignored contagion risks and the fact that the 1880s boom was now over. The effect of the first stage of the collapse was firstly some banks had investments in those banks and began losing their funds. Secondly, public confidence had now been rocked and people began demanding their deposits. The second stage, following the first stage, had significantly weakened many smaller banks and had begun affecting larger and larger institutions. In 1892, after 3 banks failed, the Victorian Association of Banks considered providing each other mutual support. But given the proposal was offered by the weakest member of the group, it was not accepted. But the statement to the press gave the impression that there was mutual support and re-established confidence. The Victorian Association of Banks were a group that handled government business and were generally among the strongest banks. A key problem limiting the association's ability to act as a lender of last resort was that each bank is a profit-maximising business, and when faced with a rival failing, they could either see a rival failing as a good thing and take their business, or, acting counterintuitively, help a rival. Because one bank failing threatens the whole banking structure, and so could provide mutual guarantees on deposits, except in cases of fraud and mismanagement. But in January 1893, when the Federal Bank, a Victorian Association bank, failed and the association did nothing, panic set in. Another statement like the first was issued, but it was clear such a statement was worthless. Next came the Commercial Bank of Australia. As the collapse of the Federal Bank prompted a run on them, the manager, H.D. Turner, asked for assistance, but in his view it was inadequate, as £1 million had been drained at 4 months, so he chose a reconstruction scheme that would prove to be very controversial. It was approved by the banks, but seen in the eyes of the public as the banks saving themselves. The scheme created a new bank of the same name. This new bank was to have a substantial part of its old capital provided by its depositors, who were required to accept 1/3 of its deposits in shares of this new bank, while the payment on the other 2/3 of deposits was deferred for 5 years. New legislation at the time allowed the proposal to be binding on all, if 2/3 of the creditors agreed. They agreed, given the dire alternative. The new bank then opened 30 days later, and any new deposits weren't subject to this deal and were freely negotiable. This method proved to be an escape for many banks, with 13 banks doing this, resulting in at least half of the notes in circulation to no longer be freely negotiable, crippling the Victorian economy. Thousands in panic gathered outside banks and swamped those that remained open on bank holidays. The banks and government measures prevented total chaos, but left a feeling of hostility towards the banks. The problem of the scheme to the Victorian economy was that relief was done mainly by charitable societies, who were now struggling to cope with the surging demand for meals and housing. But the problem was much worse than in New South Wales and Queensland, as an unemployed man could no longer access his savings due to this freeze on withdrawals. Mines and public works also ceased at this time. Businesses had also had £4.5 million frozen, and so did the charities providing the aid. In one example, Carlton Refuge, in June 1893, told the Argus they may have to turn out to the streets 30 girls and 25 babies, as their current account is locked. The Age wrote in April of 1893, "It would have been quite easy for the associated banks, had their association been anything but a deceptive name, to have saved both the federal and commercial banks." It then quoted the London Financial Times on the 13th of April. "We are at a loss to understand the policy of the Victorian Association of Banks, but it seems to us to lie between the two alternatives of absolute idiocy and criminal selfishness." The Sydney Morning Herald said, "There has been and there can be no good excuse offered by the banks for their want of cooperation at a time when they and they alone were capable of averting disaster." Both the anti-bank Age and the pro-bank Argus were pushing for the acceptance of the reconstructions. The Age lamented that no institution analogous to the Bank of England existed. The Age had an article on a national bank of issue. It said in part, "Nothing has been more clearly proved by the course of events than the fact that the people have absolute and complete confidence in the state as banker. The evidence of this was a rush to put money in the post office savings banks. Also, in Queensland and New South Wales they had fared much better, primarily because in Queensland the state government was already issuing banknotes, and New South Wales issued treasury notes to pay depositors from banks that had suspended payments, and it also made notes of first charge on assets. Perhaps on top of all of this, the final straw for public sentiment was that of the many land banks to have collapsed, one in particular, the Mercantile Bank of Australia, which was notable mainly because its chairman was a Member of Parliament and its Speaker. The bank was closed on the 5th of March 1892. Liquidators, on inspecting the balance sheet, said that they were false and deceitful. There was public anger, but the Shields government did nothing. When the Shields government lost control to the J.B. Patterson government in January 1893, a new Solicitor General, Isaac Isaacs, committed Davies and the manager to stand trial. He was overruled by his Attorney General, who withdrew the prosecution. Isaacs resigned in protest. He was eventually put before a grand jury, but this was dismissed, then later again acquitted in 1894 by the Supreme Court. This chaotic and at times seemingly unrighteous decade gave rise to those seeking practical reform of banking and movement towards a Bank of England equivalent. It also saw angry populists seeking to destroy the money power and destroy the banks. The men to rise from this time were to form the oldest surviving of Australia's political parties, the Labor Party. The New South Wales Labor Party entered New South Wales Parliament in 1891. Plank 5 of 16 of its policy platform was a national bank to secure state control of the national currency to transact all ordinary banking business. Although there was no clear design of a state bank, there was agreement that one should exist, as they felt banks worked against the interests of the worker. Some were more reform-oriented or incrementalist, seeing it as a safe place for people to keep deposits and get cheaper loans, while others were more populist and conspiratorial, no doubt fueled by parallel trends in the United States being led by William Jennings Bryan, where bimetallism was central to his populist crusade. Australian populists were less focused on bimetallism as a solution, although it did have some fans. Other works of the time were influential, most notably a dystopian novel called Caesar's Column. In it, mankind had been enslaved by bankers, who paid mercenaries to enforce their rule, but then led by a hero called Caesar, overthrow them and lay waste to them. In a killing spree so violent, their bodies pile up and are held together with cement in a pillar that touches the heavens themselves, called Caesar's Column. This was frequently referenced by the more radical parts of the socialist movement. As for Australian works, one notable one is Waltzing Matilda by Banjo Paterson, which is widely believed to be about the Shearer Strike of 1894, where Samuel Hofmeister committed suicide after burning down a wool shed. During this period, many workers had been struggling given the economy had become so weak, causing unrest. Compounding this was the 1895 drought, which would become the Federation drought. Anti-Semitism was also a strong part of this populism. The Sydney Worker on the 4th of March 1893 claimed that it condemned the Jews for their deeds. The Russian Jews, like their Australian brothers, are principally bankers, loanmongers, peddlers, and pawnbrokers. They are hated and hunted for their deeds, not for their religion. In Russia, the government is strong enough to tax the Jews. In Australia, the Jews are powerful enough to tax the government. They dress in purple and fine linen, and they fare sumptuously every day. But who knows one of them that could not be spared? Did anyone ever see a Jew work? And manual labour, no. It doesn't pay to work when others are so anxious to do it. Some saw nationalisation or a state bank as key to undercutting the banks by removing their profit margins. But a point of contention in the movement was, should a national bank be used to give cheap credit to business, or should the national bank then be used as a further weapon against private interests? While there had been a movement towards a state bank, the movement towards federation had slowed this down, as people saw it as only logical to wait until after federation to establish a national bank. But just before federation, a consensus of state intervention of some kind was forming in the 1890s, as a series of inquiries were held in different colonies. New South Wales had a select committee in 1893 fighting in favour of a state bank. Queensland was already issuing notes by 1893. South Australia had debated similar proposals in 1895. Victoria had a Royal Commission finding in favour of a state bank, 1895 to 96, which the Liberal government of George Turner tried to pass, but it was unable to do so, and it would take until after Federation for the issue to be brought up again. As for Federation, in the 1891 draft constitution, it stated, banking, the incorporation of banks, and the issue of paper money were to be powers of the federal government. The proposal at the subsequent 1897-98 convention stated, the clause as adopted gave the Commonwealth Parliament power to legislate on banking, other than state banking, also state banking extending beyond the limits of the state concerned, the incorporation of banks, and the issue of paper money. This was eventually adopted into the final constitution and gave the Commonwealth power to establish a bank and regulate banking and issue notes. While there was a lot of hostility to a state bank, government notes issuance was even conceded by the banks to be inevitable. Banks were okay with some form of notes issuance, primarily because there was no profit in doing it, a centralised system would provide protection from runs, and it was preferable to other options at the time, like a state bank, which they opposed. George Turner, who was the Victorian Premier who had failed to pass a state bank, was also the first Treasurer of Australia to Edmund Barton, and tried to settle the notes issuance in 1901. He failed, as would many Labor and Conservative governments who attempted to do so over the next decade. It would take until a party could have a majority in both chambers that this would finally be passed. In 1910, Labor was the first party to win a majority in both chambers. The Australian Notes Act of 1910 gave the Treasury the right to issue government notes separate from any bank. Private banks could still issue notes, but there would now be a tax. 10% on all notes in circulation and 2% on any new notes issuance. Some argued against the notes issuing monopoly, saying that private banks were now strong, and notes had been given first charge. Fisher in response said, I desire to have this question brought forward at a time when there is calm, at a time when we can consider it apart from crisis, apart from panic, apart from any of those disturbances which have occurred in several countries and at various times affecting banking institutions. The best time to carry through Parliament a measure like that under consideration is one like the present. He was also accused of bringing forth the notes issue to fill a hole in the budget, which was definitely true, but he denied it was the main reason. A reason governments wanted to have notes issuance was it was in essence an interest-free loan. Billy Hughes was to say, if we are getting a loan without paying for it, we are getting it on exactly the same terms as other banks, and if it is right for them, it is right for the state. This was not strictly true, since banks' profits are taxed and governments aren't. The subsequent debate descended into quotations of David Ricardo, John Stuart Mill, Lord Overston, and H.D. Macleod as suited on both sides to support or denigrate a position, as were a myriad of historical examples, mainly Britain during the Napoleonic Wars, or the American greenbacks. The bill itself, to safeguard against inflation, had a 25% reserve of gold ratio. The opposition was not particularly strong, and was mostly political opportunism, as many governments, both Labor and Conservative, had tried to settle this issue before. This would not be the first or last time either sides of politics would try to take a position contrary to their old one to gain some political advantage. A question that some may wonder is why did Fisher settle the notes issue before the bank issue? And why did he not give the banks notes issuance, like King O'Malley wanted, to this state bank? There is no direct evidence, but it is likely that the notes issue was an easier issue to settle than a state bank, as banks were not heavily opposed to the notes issue and the government could reap an immediate profit. Although strangely, the most opposition was to issuing a 10-shilling note, which was felt by the age to change hands too rapidly, particularly among the poor, and would degrade the note and be unhygienic. The launching and designing of the note would take considerable staff and effort, and so the Treasury sought help from trading banks, who sold their notes to them and had the words Australian note printed over the top. But eventually the Treasury printed the first Australian pound notes, which were circulated in 1913, even the 10 shillings. A national bank is a necessity. It will do government's business here and in London better than any other bank could do it. Time and experience will show how its functions for usefulness may be extended. We can rest assured that if this proposal, which is new in many important features, is a success, all parties will ultimately lay claim to a share of the honour of having brought it into existence. While not a major issue for either party in the 1910 election, the Labour movement more broadly saw a state bank as critical. Perhaps the most important figure in shaping this bank was the legendary Labour figure who claimed to be born in Canada but was likely born in the United States, and according to himself almost single-handedly established the Commonwealth Bank. This was King O'Malley. However, Gollan points out the absurdity of this claim, as the movement towards a bank has been happening since before O'Malley. O'Malley's claim was two-part. Firstly, his policy-making and publicity for the need for the bank, and secondly, how he pressured Andrew Fisher to bring forward the bill. In Kim Beazley's writing on the Labour Party and the origin of the Commonwealth Bank, he points out that in his life, O'Malley told 5 different versions of the events. The main one is that O'Malley, realising that Fisher was not going to implement Plank 6 of their platform, got his torpedo brigade to pressure the caucus into forcing his hand. Gollan finds that from the caucus minutes 1910 and 1911 that while incomplete make all versions of O'Malley's story implausible. O'Malley claimed that he forced the Commonwealth Bank Bill on October 5, but the bill was in caucus on the 30th of August and was among 18 proposals moved by Fisher. As Beazley puts it, there was no torpedo brigade action. There was no motion to force Fisher's hand. There was no cabinet resistance. The bank was a cabinet recommendation. This finding is supported by Hughes and Pearce, 2 cabinet members who denied O'Malley's version. Hughes was to say, "As a flight of imagination it has its points, but as a contribution to history it's not worth a moment's serious consideration. No doubt Mr. O'Malley has told this story so often that he has come, as did George IV with his apocryphal story of the part he played in the Battle of Waterloo, to believe that things really did happen, as he says." While O'Malley overstated his impact, he did really have a large impact in getting support from the public for the bank and adopted by the Labour movement more broadly. Even the opposition noted his contributions, recognised as such by Treasurer Earl Page in 1924. Ever since the inception of Federation, the Honourable Gentleman, King O'Malley, has urged the establishment of a national bank. When the question of a Commonwealth Bank was first mooted, it was generally expected that a truly national bank would be established, a bank of deposit, issue, discount, exchange, and reserve. But it's important to note the bank he envisioned is not what was finally passed, as ever since arriving in South Australian Parliament, he wanted a bank with notes issuance. But Fisher's bank was not the same. It was deprived the ability of being a bank of issue by the Treasury under the 1910 Notes Act. The Commonwealth Bank Bill that was passed and assented to on the 22nd of December 1911 established a bank called the Commonwealth Bank of Australia. Its governor would be independent and would have sole powers and discretion. He was appointed for 7 years and could essentially run the bank and hire who he liked, and could only be removed by a parliamentary majority, and he could select as well where the head office and branches, including London, could be. However, the government still must submit balance sheets every 6 months to an Auditor General, the Treasurer, and both chambers of Parliament. Its starting capital would be £1 million. The profits of the bank were to be one half into the Bank Reserve Fund, or BRF, and the other half into a redemption fund, RF. The funds in the BRF are to be used to pay down its debts. The RF is to pay back loans from the Treasury if the bank funds are surplus to its needs. It can be used to pay down Commonwealth debts as well as state debts, which the federal government can assume as part of the Constitution. The structure of the bank would include a savings bank with a separate headquarters, and its branches must be separated from the general banking division. The bank is authorised to issue debentures up to £1 million, but it can be increased by sums approved by the Treasurer. The Consolidated Revenue Fund would act as guarantor of these loans. The Commonwealth Bank, in its original form, could not perform how the Bank of England does as a central bank, that in O'Malley's words could be an endless cable of indestructible mutual dependencies supplied by a financial reservoir of inexhaustible power. Nor could the bank redistribute income to advantage the poor. It was just a bank. Its only special feature was that it handled Commonwealth business. The bank for Fisher was really a compromise between factions. The hard left wanted a bank to destroy the money power, and the other end wanted minimal intervention in the market. It did technically meet the 1908 fighting platform to have a government bank, although not to O'Malley's liking. As Billy Hughes was to say, O'Malley's fantastic scheme was rejected by an overwhelming majority of the party, and then it was because Mr. Fisher set his face resolutely against Mr. O'Malley's scheme and insisted on the bank being established on sound banking principles that the bill succeeded so magnificently. The savings bank came under intense criticism, as no doubt this bank's deposits would be used to underwrite the federal budget. But state government banks already did this, and so the Commonwealth Bank would undermine them and deprive them of a funding source. Fisher had made it clear, though, that the Commonwealth Bank would be competing with state banks and use its powers to its advantage. These powers were that the post offices and their staff could be used to carry out banking business and would be for the Commonwealth Bank alone. And he also saw economies of scale in a federal state bank, allowing for lower rates. Or in his words, I desire to say quite frankly that I think the passing of this bill will mean that there will be ultimately only one savings bank in Australia. Let me add, however, that no citizen of the Commonwealth will be a penny the worse off on that account. This government will provide, so far as it can possibly do so, for taking over the liabilities and responsibilities of state savings banks, if the state banks so desire after this bill comes into operation. Essentially, the Commonwealth Bank was acting as agents for the states, taking on the liability of deposits and collecting future deposits and handing over 75% of these funds to the state governments, and would receive state debentures in return. To establish the bank on sound banking principles, Fisher sought a sound banker. After consulting leading bankers, he offered Denison Miller the role. On the 6th of May 1912, C.W. Wren, chairman of the Associated Banks of Victoria, wrote to Denison Miller, I recommended you to Fisher as being absolutely the best qualified man I knew for the position, though I told him I did not think you would accept it. That very day, Fisher did send a letter to Miller, and after 2 weeks of negotiations, Miller did agree. Miller was the second highest ranking banker for the Bank of New South Wales. He had extensive experience in branches across Australia, and his experience in banking knowledge and connections across the country meant he was able to quickly establish the bank and get staff. Miller from a Melbourne office began on June the 1st making arrangements to open the bank. First the savings bank, which would use the post office and 4 state savings banks out. As early as July 15th, 1912, 489 agencies had been opened in post offices, and was opening branches in all states and the Northern Territory within the year. The first depositor was the Prime Minister, then King O'Malley, and then the chairman of the Associated Banks. While this was going on, the governor had to launch the general banking division, and he had to travel the country looking for sites and hiring staff. His long experience with the Bank of New South Wales meant he knew many banking officers from his role travelling the country. He appointed James Kell to the London branch, and he personally hired over 100 men, mostly from other banks. The bank also needed to create regulations, find premises to conduct business, and set up agencies across the world for exchange. The Bank of New South Wales helped when it could, offering to be an agency in Australia, New Zealand and Fiji. Queensland National Bank, Bank of Adelaide, WA Bank and Bank of Tasmania also offered to be agencies. Bank of New South Wales also allowed use of its foreign assets and correspondence. The Commonwealth Bank opened branches in all state capitals, Canberra and London, by January 20th, 1913. After its first day of business, it had £2,368,126, although this was mostly due to government transferring its accounts to the bank. The controversy of the bank had subsided by its opening, as Miller's appointment showed there was no radical changes and Conservatives were pretty happy. Denison Miller was to say, I want the bank to be like the Bank of England. It should grow so strong that should there be a crisis, we will be able to stand behind other banks and help them. From my varied banking experience, I know that the Commonwealth Bank can and will be a great strength to other banks. While the Labour movement's more radical elements felt it was a source of strength to private banks, not in keeping with the social democratic ideal of the absorption by a national bank of all institutions that derive a profit from operations in money or credit. The West Australian Truth on the 26th of October 1912 also wrote, "The Bank of England has done much harm to the English people. Its history should be written in letters of blood." The bank's policy was not aggressive, offering lower interest rates than both state banks and private banks for deposits, and had lower maximum interest-bearing amounts. While Tasmania handed over its state banking business in June of 1913, more than happy to get the liabilities off their books, WA was also meant to do the same, but negotiations broke down and delayed it until 1931. While most states were either neutral or happy to work with the Commonwealth Bank, Victoria and New South Wales were bitterly opposed to amalgamating, even raising rates 0.5% and launching advertising campaigns to compete with the Commonwealth Bank. In Denison Miller's plans, he envisioned that the bank would eventually take over all state banking and notes issuance. Denison was given absolute power over the bank, and Miller was in control of the main business of lending. And every advance had to have the governor's approval. In practice, Kell handled these except loans above £2,000, which Miller approved himself. Miller handled land purchases and even furnishings in the office, and though these were eventually delegated, they still needed his final approval for any purchases. He hired all the original staff, and although delegation of workers under £300 were delegated eventually, the governor was still minuting staff changes for as low as cleaners as late as 1919, and any authority that was delegated was mainly to Kell, the deputy, and to Armitage, the chief accountant, who he put a great deal of trust in. The London office, however, could not be so tightly controlled, but policy was still firmly stated by Miller. Some problems they would face, though, was that the Australian government account in England was taken off the Bank of England. While they did not seem to care that much, other banks saw them as a challenger to British banks that did business with Australia. Campion's view was that their attitude appears to be one of tacit opposition to the Commonwealth Bank, which they evidently regard as trespassing on their exclusive province of dealing with all financial matters on behalf of Australia. Campion ran the London Bank, and its main business was to provide telegraph exchange and postal exchange of deposits and negotiable bills, and in time take on state governments' current accounts in London. While relations were strained, they eventually improved when Fisher as Prime Minister resigned in 1915 and became the new High Commissioner, and used his influence to do much the same as in Australia and set rates below competitors for deposits to not compete, and worse terms for telegraphic transfers. The savings bank was for travellers and migrants only, so they could draw on passbooks in Australia. A problem for the bank's direction was Joseph Cook's Liberals had ousted the Labour government, but were not in majority in both houses, so policy on the bank was unclear. Treasurer John Forrest and Joseph Cook did try to limit the bank to only conducting government business, but the bill stalled and the election was called before it could pass. He also attempted to close the London branch, but Labour's return in 1914 stopped this. By the end of the 1914 financial year, the bank had 143,143 depositors and £9.8 million in deposits. The bank was to take on significant new roles from here, as World War I created a great deal of demand for government loans. But that story is for another time. For now I'll leave you with the words of Robin Gollan. The mountain had laboured and brought forth a mouse, but it was a mouse capable of growth, far beyond the limits normally imposed by nature on its kind.